Good evening, everyone. How are you doing? I will just check my microphone because I've changed some settings and I believe it's pretty fucking loud right now. Let me just. There's this decibel settings in the microphone / aux input that you can change. I set it to like maximum, and like I hope I'm not currently air raping you. Alright, yeah, I can set this to a little bit lower. Or maybe not, actually. Well, I'm just wondering if there's the sound in the background. Just a second. What, man? Alright. So basically, in this live, okay, let's just wait for the stream to load. Okay, yeah. So in this live, I've actually prepared a document that I made on the Canva recently, like a few hours ago, and it's basically like a backtesting, not really like a strategy, but more of like. So I'm writing down those conditions of the market. I can actually show it to you. Just let me switch my window. Hopefully it won't lag and go black screen. YouTube Studio. No, it's not YouTube Studio. I'm searching for what? Marketplace Canva. Yeah, sorry about my nose. I was outside and probably got sick a little bit. It's like fucking cold. Okay, I see it now. So this is the presentation I made on Canva, and I actually made some modifications to it. So basically, hopefully I can present it to you. Present full screen. I don't know if this will like show up on the live, but anyways. Market space, okay, like a name of the document, whatever. Break of structure plus liquidity sweep. So basically, price has to break structure of the move that caused liquidity sweep. So what this means is the move that caused the liquidity sweep, which is this one, price has to break the swing low or the low of this move, or actually, let's say higher low, okay? And this is basically like a market shift, but there are too many names of it. I've been watching the Trading Geek. He's been exposed for like fraud, and he basically said there's like a break of structure when higher high gets like a new higher high, and this is like a break of structure, which is actually really long. The break of structure is when there's a potential shift in the market, okay? So, and basically what if not? What if you will actually have like other conditions? So basically we've learned, I show you this on the past live streams, that if we have a down candle and right after this we have an up candle, this is actually a low. This actually represents a spike. And basically if we don't see like a primitive on the first eye, if we don't see like a spike, then we can also use the ones that are in this rally, and basically we can mark the break of structure off of them, but then we have to like rearrange the other confluences that are used for a retracement, like a fair value gap right here. Big and small blocks. So the further, okay, this is actually very complicated. I barely understood it my own strategy. So basically, the further away the point of liquidity that was taken out is, the bigger the move will be. Either it's a down move or up, doesn't really matter, okay? If, for example, liquidity sweep was taken from 5-minute time frame top, or basically any spike, the move won't be as big as if price has taken out liquidity from any spike, top or low, further away from where the price currently is. Okay, so I actually made like a little drawing right here. So basically we can see that price has swept the liquidity of this low, and basically the whole block, like, how can I say this down? Basically the whole like situation is bigger than this one, which is actually familiar to this one. So basically this run is bigger than this one, this hill is bigger than this one, whatever. But it made like bigger move right here, and then it made like a bigger move down. This will be our area of profits. Okay, and here we have like a smaller liquidity sweep situation, and therefore a smaller reaction of it. Okay, so hopefully that makes sense. I don't want to like confuse you guys or some shit. Then this is just like a helpful tip for spotting. It's nothing rocket science or some shit, but basically increased frequency is just like the name of the concept. I just made it up myself, doesn't really matter. So basically spotting an order block, shit man, what the fuck? Spotting an order block can be as simple as click. If you can spot them using, this trick. So basically it's like BPM, beats per minute. It measures indicator for your heart beat. It's like BPM when waves increase the size on bigger BPM. Okay, what the fuck? Okay, so basically in short form, we can see this wave right here. Okay, it creates high and it creates low. We have like a better picture here. So basically this low gets taken out. Alright, and this height gets taken out. This is liquidity sweep, and this low gets taken out. It's a breakout structure, and this actually creates a bigger move than this one, which is actually like a helpful tip for spotting. So basically what you have to search is, it's like a little move or any spike, but then after this one you have to like look for a bigger spike that also creates like a breakout structure and actually breaks the trend. God damn, what is wrong? Get eliminated by massive row. Yes, this is a alright. And delayed retracement. Again, those titles are nothing like rocket science, like those ICT. I don't know if you watch the ICT from Moving Average, or it's a channel name, I don't know actually. But basically, he's been giving a lot of names to those concepts that are actually like the same shit. I don't know, one of those concepts is, I think, similar to those ones, but he called it like a silver bullet or some shit. I don't know, man. Like, he's done it in the past videos, but he gave like different names of them. So basically, silver bullet is just, I don't know, he just started like running out the names, and so whatever. So basically, if a retracement does not happen soon after the breakout structure, and if it happens a bit later on, it can also indicate a bigger strength in its aftermove. Alright, so I don't know if I can actually show it to you guys on the charts. I think I deleted it. Yeah, alright, no problem. So basically, this is our order block, this is liquidity sweep, this is the breakout structure, and what we expect from like after the breakout structure is a reaction or a retracement. But in our case, this retracement happened like a long time after the order block. But it's like no worries. If it still retraces back to our high points of interest, it's actually still like a retracement that you can take trades of. It's actually like I figured this out. I mean, on this one I haven't looked at many of those like similar examples, but in this case the move is actually like really bigger after like a delayed retracement. That's why I gave it this name. So basically Hopefully this is like nothing complicated and wait, let me just switch the screen. Oh, okay, yeah, now it's going to be fucking black. Okay, nice. Capture audio. No. Okay, so basically I wanted to do like backtesting with you guys, and basically if you have like any recommendations, you can write them in the live chat. I can see the chat right here. I've got like it's like two views. It's not the. We don't currently have any viewers. Okay, there's this. Alright, we got one viewer right now. Cool. So basically, we're going after the chart on the left side of the chart and backtesting, basically looking out for any like market conditions that are appearing on more places, and we can actually take advantage of those, write them down, and basically see how we can trade off of them. Okay, so basically what we can see here, I don't like this is mentioned on the Brad Goch. Here's actually a name to the trading like channel, the Japanese guy, Chinese, I don't know. He always like, I don't know, let's say this is like this would be like a demand zone for him, which is like I don't know, this is just a consolidation if you ask me, but he'll like give the demand zone right here. He'll like mark it out and wait for like a retracement, which yeah, it works, but what we are looking for is actually based on the liquidity, because as I said in the previous lives, I will not take, I don't know, some, let's say top, and this is what I've learned from TJR. I don't want like say this is mine, because it's not. And he basically said that for him, for example, this will be a good example right here. For him, this is like not a supply zone, because this is like a top, and if we this is the top that we can take advantage of as a liquidity grab, because people are placing like short orders right off of this one. Because why? A lot of retail traders would, like, let's say, pull out Fibonacci, draw it right here. They would say, I don't know, like this low not being able to make it to this point, and they would consider this. They would like consider this shit as a downtrend. But basically, I think I've said this in the like last stream or something. In the trends, you can always like. There's sometimes like the way price moves, which is like very odd. But let's say we're in the downtrend and price is making lower highs, lower lows, lower highs, okay? And now this is a spike that we can take advantage of as a liquidity grab. And so what price will sometimes do is people will place like stop orders right here. And then price can take those orders, and people would like say this is like a market shift, because they don't wait for confluences, and they will like long that shit, place, I don't know, order, like stop orders right below here, and what happens next is price takes advantage of those orders. And what now? Price makes some sort of break of structure right here. Okay, it took the liquidity, it created break of structure off of some, I don't know, low spike, and it retraces back, creates a lower low, and continues down. Actually, we could like write this example. I don't know if I wrote it in my diary. Not diary, but this market space presentation. So just let me check if something interesting is happening on our live stream. I haven't done this live stream for a long time because I have to like go to sleep and stuff. But basically, live stream. I will do this live stream for long. Okay, my stuff is working good. Nice. So basically, yeah. So we went a little bit off topic, but what I meant to say is, those like talks and stuff like this, they are all points of interest for a liquidity. And once you like start to realize that you won't be actually taking them as a supply and demand, or as like, I don't know, price will bounce off of this ceiling stuff like this, as TJR said. I mean, yeah, it could bounce, but we're actually on like a lower risk if we actually take advantage of the liquidity, because liquidity is the base of the market movements. Markets move because of the liquidity, and if we take advantage over liquidity and not set supply and demand as our priority, then we're already like ahead of some beginner retail traders. I mean, I was at this point, but I'm not really profitable yet, because I just learned this stuff, and still backtesting this, and like there's no guarantee, but like if we actually give our best, I'm not gonna like say too much here, because I don't know, I want to like seek stuff a little bit, not to like talk too much, but just here to just like teach something. This will be like a very actually good like example of liquidity sweep. Yeah, I don't know if I just made this up, like, but I've seen like example of this. Maybe we can exploit. Okay, yeah, it's right here actually. So basically you have like a price going in an uptrend, okay, and let's say this is our primitive like low, and it gets taken out, and people would like go crazy right here and say this is like this is like a market shift or something, but I complicated this one too much. Wait. If it goes up, yeah, because we like still need to see the reaction off of it, and okay, so yeah, let's say price made like yeah, this would actually be, I think, considered liquidity sweep, although like liquidity sweeps are placed onto the higher highs of the upper trend, but in this case people would like be buying here probably because the retracement ends, and they would actually get swept out if they didn't like exit here or something in the middle here. But basically what we see is again, it's a pattern, but I don't like to trade patterns. Basically we have like triple bottom, some shit, head and shoulders, I don't know, but price actually swept the liquidity of this low and this low, but I will consider this low because it's lower than this one. And after that it actually made a good reaction off of it. Here we can see like okay, yeah, fair value gap, but this is actually an order block. And why is it an order block? It's because this is a liquidity sweep, and this right here is a breakout structure. And what is the move prior to the breakout structure? It is from this low to here, okay? So price goes down here. I think it pretty much goes into our equilibrium zone. I mean, yeah, it touches it, but it's still in the equilibrium, and we could like take advantage of this. And this is like a good example of this liquidity sweep. But again, I wouldn't like suggest this to you, because again, I'm still backtesting this, and until I don't like make it live proof that this shit actually works, I don't actually suggest trading this. I might like, I don't know, teach some market mechanics that I've learned from the charts in the future, but there is no guarantee. So basically, yeah, I will write this down. just need to like take a picture or something. Actually surprised this actually like works. I don't know. I don't want to be like those ICT or what is this inner circle trader. I think he basically, I mean, his strategies don't make like any sense to me. I mean, I haven't actually done any like deeper digging into it, but he's just like he's actually overconfident with risking his whole capital. It's like his behavior on the trading is like wild. So I will just take a screenshot of this one. It's not perfectly like lines are curvy a little bit, but no problem. Where's my market space? Again, if you have like any suggestions, you can write them in the live chat. I will review them and definitely make some foundation of it. Okay, so I'll actually share this screen with you because why not? Okay. Hopefully you can't like access this board because you have like the link here with this like one. I don't know. But basically let's entitle it how should we name this? Then. Trend fake trend, no, fuck. Trend manipulation, sounds good. Again, I don't want to like overcomplicate with those names. It's too long. Okay. Trend manipulation. Those are just. I'm actually making my own concepts. What the fuck? Alright, let's put this one. Size 30. Medium size. Just trying to make it look better. So basically a description. Price will sometimes create a break of structure in a trend, manipulating retail traders into considering this a market shift. But if we wait for an actual reaction after the break of structure in quotes, because this, I mean, it's break of structure, but it doesn't like create a market shift, you know, the trend still continues. It's actually, I mean, I probably got some things wrong, but I'll figure this out on the way. Probably make like some more backtesting on this. But basically, okay, so price will sometimes create a break of structure in the trend, manipulating consider this. And consider this a market shift. Typically for action US. We can take advantage of fake market shift. Alright, let me just put this picture in. Sorry, what the fuck? I'll probably need to have to like mark out some more stuff. So basically in the downtrend, price would create this break of structure. Okay, so yeah, it will like create a break of structure, but this is like actually like liquidity. No, I'm actually really fucking confused right now. It nothing makes sense to me. What the fuck? that one viewer. Okay, doesn't really matter. Yeah, nobody's watching anyways. Basically, wait, dang. Fuck, it's black again. I apologize for this. Okay, now we have it. Okay, so basically, okay, yeah, look. So, if price still makes a lower low, but it breaks this high, right? If the price was to create like a higher low right here instead of lower than this low, then yeah, this will actually be considered as a solid market shift. But if you get like a low, but this low causes the move that breaks the high, I would not consider this like a market shift. And then we have like some other consequences, but basically, let's say there is like a, I don't know, fair value gap or something right here. You can see a reaction off of this, and let's say that there is like a fair value gap right over here, and we see like a reaction of it come down. Well, we will have to wait for the confluences right here. But if we see like price reacting off of this fair value gap right here onto the move that was supposed to be a retracement, which is actually a drop following a downtrend, then we would still consider the basic structure as a downtrend and not actually market shift. So I don't know if you like if you could follow me, because I can't understand what the fuck I am saying right now, but yeah, this is the downtrend. I just have to somehow now mark this up, because I'm really fucking confused. Alright, wait, I will type it in our... Yeah, fuck, this is confusing now. Alright, so price will sometimes create a break of structure in a trend, manipulating retail traders into considering this a market shift. Okay. But if we wait for an actual reaction after the break of structure, we can take an advantage of fake market shift. Yeah, I still don't get it. Oh fuck, man. Okay, but if the price, no, if the point that made a move, no, if the point that caused the move to make a BOS is still following the trend, then we would consider overall structure as ongoing trend still. Ongoing trend. Yeah, that's better. Alright, I'm braining out right now. The brain is like blasting. Fuck. Oh. God damn. So if I will, I can actually see like the chat live. Nobody's writing shit. Okay, I'm gonna give myself a like always be your own. What the fuck? Okay, this shit is complicated. Alright, so let me grab my text. Ooh. Still a lower low. That caused shit. Okay. So we can like do something like, let's say this, like still following the trend stuff. Like this. Alright. I can just make this one a solid line. Just put some text on it. Downtrend. Alright. Break of structure. Mark this break of structure. This break of structure. It is, yeah, because you remember, in a downtrend, liquidity is taken by lower lows. So this is why I'll write this down. Alright, so in uptrend, in uptrend, liquidity is taken off of a higher high, but in a downtrend, the liquidity is taken by lower lows of previous lower lows. So hopefully that makes like a sense. Okay, I forgot to like write. In uptrend, the liquidity is taken by higher highs of a previous higher highs. So basically what I'm trying to say is that in an uptrend, right, every rally that breaks the previous high, the trading geek was saying this was like a break of structure, but it's actually not. This is actually the liquidity sweep, because it's still like, it still takes a liquidity off it. It's a top being higher from another top. I mean, yes, it's in a trend, but I don't know, some people like really do consider this like a opportunity to short, because it's like a retracement. People actually do trade retracements. That is what we need. Don't have. We shouldn't forget this. Okay, so. Man, I'm fucking braining right now. Fuck. Alright. Let's duplicate this. Okay, I can duplicate it. So basically, retracement. But how do I rotate this shit? The fuck? Alright, I can. What I can do is now let's say there's like a fair value gap, I don't know. Right here. Alright, now I can actually look like with my brush tool. No, actually error my better. Fuck. This is like confusing as fuck right now. Man. Wait, I will actually... Okay, I think this will be better. Like, to actually highlight which retracement I mean... Alright. Maybe we can like highlight this shit with some... Where is this highlighter? Retracement. Test the retracement. So we can make this one a different color. Green, I don't know. Okay. Fuck man, this is... Damn. Okay, so we got another fair value gap right here. This actually like makes some sort of sense, I don't know. Fuck. Alright, so I think we can like screenshot this shit. Just make this a bit lower so we can actually see the breakup structure. I'm thinking where the liquidity is still here, but it's like the liquidity is actually always supposed to be like, I mean, it's not like strictly that it has to be, but it's like always supposed to be above the breakup structure. But in this case, it's like different. Man. Fuck. Alright, let's not complicate. Let's screenshot this. And... Alright, no, I don't like this. Maybe we can like screenshot of somewhere, I don't know, here. Yeah. Okay. So we got it for a downtrend, now we have to make it for an uptrend. Fuck man. Okay, we can do like this, I think. Alright. Need to type it here. There. No, I don't fucking get it. Because if this made like if this is downtrend and it breaks the lower high, this is then considered the breakout structure, not a liquidity sweep, yeah, but wouldn't it like be logical for this low to be like higher than this one and then like create a breakout structure? Because like this one is lower than this low, and the rally didn't break through the previous higher lower high. Sorry. But then we see like this low higher than the previous low, and after it makes the higher low then causes the breakout structure actually. So maybe our strategy actually does make sense. I mean, it's fucking complicated, so I'll still leave it there. This is like for a downtrend. I think we can see it right here. Fuck. Alright, let's do it for, I don't know, fucking uptrend. Okay, let's see if this example is actually true. So This is for an uptrend. So you basically have to like flip the picture around. I need to copy this. Just put it right here. Okay, I will have to make this smaller because fuck. Actually no, we can like make this one 30, yeah, but just make it like a block. It works fine. Have to put like the remember sign right above this one. Remember. Fucking mark it with red. Okay. Right, what is this? Fucking con. Alright. I'm actually so tired right now, but have to finish this. Can't go to sleep before this shit. Okay, so we have to mirror this shit basically, and then we can like figure out on this example right here. So we can, I think we can delete this because I copied it into the Canva. I might like leave the document in the description. I don't know, I'll see, because it's not finished yet. There are probably like a lot of concepts yet to uncover, but we'll just focus on this one for now. We have to make like a alright, so actually, you know what, we can actually do this with the path too. I forgot we got this one. So path, okay. So we're in an uptrend, okay, and we're making higher highs, higher lows, higher highs, fuck. So this one is this one. And this low breaks the previous one. Okay, I think I got it. Yeah, this is it. Okay, nice. I will leave this text because I think we'll need it. Just delete those arrows and shit. And this is fucking This is actually the work I've always wanted to do, something like productive. Fucking. Okay, what is this? So many fucking drawings. The fuck? Delete this. Alright. So basically, fuck. Okay, so we have an upgoing trend, and higher high. Okay, so we're going to actually change this. Higher high. It's actually one. Okay, so this is a retracement. Fuck, what is the retracement? Right here. So yeah, like I don't know, fucking fair value gap right here. Again, this is liquidity sweep. This is the breakout structure. Wait, did I okay, I screenshotted the breakout structure also. Well, so this is the breakout structure and this is the retracement. Okay, so basically this retracement arrow, retracement. I'll actually do this above. Fuck. Right. No. So like this retracement. So what we basically have is retracement testing onto a retracement. Oh, damn, that's crazy. That is crazy. Fuck. Let me mark this out. Right, I will say this one to color bad. Did I make the same? Okay, I forgot to like the trend line right here. Fucking. Alright, trend. Nice. Did I forgot something? I don't think so. Okay, we're good. So now we can screenshot this. So it's vice versa. Okay, what the fuck did I do? Okay, I'll actually mark out this in the downtrend and then the uptrend. Alright, so I think this would be good. Up, no, fuck, down, trend, up, trend. And like change the color or some shit. Alright. Okay, this one is not actually like a visible one. This one is better, I think. Alright, so I'll actually screen share to you Just check my live stream. Okay, everything's nice, fine. Switch to the YouTube studio. So you can see my statistics. I can like flex a little bit with my views. Look at this, 31 seconds. Fuck. Alright, so what I made here is so here is how it is. Present. The fuck? Okay. We're actually in it. So, trend manipulation. Price will sometimes create a breakout structure in a trend, manipulating retail traders. Okay, actually, I can actually like fix this and actually create. Price sometimes create a spike that follows a trend, but will cause a breakout structure in a trend. Manipulate. Okay, we can actually make this one smaller. So present. So price will sometimes create a spike that follows a trend, right? So spike that follows a trend, but will cause a breakout structure right here in a trend, manipulating retail traders into considering this a market shift. But if we wait for an actual reaction after the breakout structure, we can take an advantage of fake market shift if the point that caused the move to make a breakout structure is still following the trend. Wait, what? We can take an advantage of the fake market shift if the point that caused the move to make a breakout structure is still following. Okay, yeah. So I didn't even need to like write this shit down. It's like already here. But anyways, better make sure double. So if the point fucking what is this? Okay, whatever. If the point that caused the move to make a breakout structure is still following the trend, then we can consider overall structure as a still ongoing trend. Okay. Now I wanted to test it out. Wait, I can just switch my. Yeah, it's black again. Okay, no, it's on. So I wanted to see this example. So basically, we have got spike following the trend, and actually, like making a breakout structure, but it's like fake breakout structure. Damn, bro, this actually fucking works. What the fuck? It's like, yeah, but it actually works. What the fuck, man? Damn. Okay, so let's analyze this shit. So, we're in an uptrend, okay? What the fuck is this right? My fucking Telegram. Okay, so tomorrow's NFP. Whatever. Don't trade on news, but basically, we're in an uptrend. And what happens is, this low gets taken out. I mean, taken out. It actually creates like a breakout structure, but this breakout structure is actually fake. And we're actually like waiting for a retracement right here, because we want. Some people will think this retracement, like this is actually retracement, but this is actually a rally, a run. Okay, but like yeah, you would still consider this a retracement if you wouldn't see like this rally right here, and people would say. Like, oh yeah, this is actually going down, but no, this is actually a fake breakout structure because fuck, you would have to see like the reaction off of it. It's all based off of reaction. Oh wait, what the fuck? Did I just messed everything up? What the fuck, man? Nah. Nah, I'm fucking brain rotting this shit. Wait, because this is like still a good market shift example, but man, what? No. This is like still no, I'll have to remake this shit. I just figured out like this is like the same example I've been talking about the frequency, increased frequency, because look, if we take our brush tool, okay, what is this? Higher high, higher low. It gets taken out by liquidity, break of structure. And then we like wait for a retracement here, but fuck. What was the fucking thing? What the fuck? I didn't get this shit. So everything, I mean, yeah, it actually could still potentially work, but everything is based off of the reaction right here. Because look, price created a break. Okay, this is break structure. This is the low, you know, because this candle goes up and broke structure. And people will think that this is short, which is actually like true in our concepts, but what? Okay, maybe if we like set an equilibrium, let's say it here, and it like didn't reach the equilibrium, but instead it stayed in the premium zone, went up the okay, let's for now let's write down. Okay, we can actually save ourselves from this fucking. Let's write down only in case price doesn't reach the equilibrium point. Alright, this presentation is like messed up right now. What the fuck? I have to fucking drink the water. I can't do this shit. What the fuck? So if price doesn't like reach the discount in the equilibrium, and it reacts off of this fair value gap. Okay, this is like. I think we can delete this. Okay, but let's say the price didn't. Okay, so I think I just figured something out. So basically this top didn't take this top's liquidity, but I mean it took this liquidity right here. Boy, what the fuck. Okay, this fuck. This liquidity was actually taken by this high right here. But it didn't like get a reaction. It just went an ongoing trend. Fuck, man. Well, this is actually fucking confusing right now. Maybe we can also write down that. Alright, let's do it like this. So this is like the liquidity sweep right here. Liquidity sweep. But the fuck. The reaction off of the move that made the liquidity sweep like isn't valid. I mean, it didn't create any break of structure here, if you like ask me. It really didn't. Just like continue with the trend. Okay, we'll have to like make the part 2 of this trend manipulation. I will do this right now. And what? There is just too much fucking text right here. It's like that. Okay, no, actually, I can actually delete this one, but I'll copy trend manipulation, put it here. Okay, this. Right, I will just go for a. I'm going to get like a journey. Alright guys, I'm back. I'm back. Wait, where the fuck is the... Why is the frequency? What the fuck? It is 26 decibels. Yeah, okay, no. Okay, so basically, where the fuck are we? Okay. Okay, so here is how we'll do. We have to set the conditions. Okay, mouse matters. What the fuck? So if the liquidity gets swept and the reaction doesn't show us like doesn't indicate to us that price will move down after the liquidity sweep, and instead it actually continues rallying up higher, but this rally doesn't take the liquidity of the other top before this one, but rather drops and makes a fake breakout structure, then this concept is valid. Okay, so fuck. And my brain is so fucked right now. Fuck. Wait. Fuck. Okay, so let's write this down. What did we say? Okay, well, no, we have first like So let's put this. And the fucking thing is, we'll have to do this for the, like, the vice versa, like, fuck. Alright, let's set some arrows. Okay. Where's the fucking... Doesn't sweep with goes, rather drops. Then we set the concept. I would actually like to name this concept, because it's alright. Let's set some arrows. This stuff doesn't reach to liquidity. So this would be our potential liquidity sweep. Alright. Okay, so what did we say? What the fuck? Okay, so we have to do this. So this move is a reaction. No, I have to point the arrows, not go along the trend. So this is a... Wait. Reaction. Oh fuck, reaction. A retest makes more sense. And this is a retest of a retest. Alright, so basically we've got our whole setup now. Okay, hopefully this makes sense. Let's try it. I mean, this could be like liquidity sweep, but we look at the highest points, you know. And like we wouldn't consider this fucking liquidity sweep point. I mean, we actually check this one. Yeah, this is like a potential liquidity zone. It's not this one. It's too low, too small. Sorry. Yeah, I see. This liquidity got swept. And this one, yeah, also got swept. I mean, swept, it's like an uptrend, you know, in uptrend, higher highs take liquidity off previous higher highs. It's just like, we can actually screenshot this with the heat map on. No. It's actually not a heat map, but basically like a indicator for a potential liquidity zones, like where the liquidity is sitting, or orders basically waiting to get filled. In other words, now I have to like make the explanation. Right, so hold off. Line to the left. So let's write some rolling shit. So if liquidity gets swept if liquidity gets swept, but first reaction doesn't indicate down move to us, but rather an ongoing rally, but the rally doesn't end up taking a liquidity before of the top before the top, which, how do you say like top whose? I don't know, I just like whose, hopefully that's correct. Liquidity was okay, so what the fuck am I writing right now? If liquidity gets swept, right, but first reaction of the move spike that caused it doesn't indicate a down move to us, but rather an ongoing rally, but the rally doesn't end up taking liquidity of the top before the top whose liquidity was taken, then this concept is valid. Okay, I think this is it. I personally think this is it. But here's the shit. We'll have to like make a shit ton of backtesting on this one. Yeah. Okay, I hope you can actually see this image. Wait, let me just switch to the market space presentation. And let me present to you this sweet little concept. Okay, so you can read the text. Okay, that's good. So basically, trend manipulation. Price will sometimes create a spike that follows trend but will cause a break of structure in a trend, manipulating retail traders into considering this is a market shift. But if we wait for an actual reaction after the break of structure, we can take an advantage of fake market shift. If the point that caused the move to make a break of structure is still following the trend, we're talking about this point, then we'll consider overall structure as a still ongoing trend. Now remember, in an uptrend, liquidity is taken by higher highs off of a previous higher high, but in a downtrend, the liquidity is taken by lower low off of previous lower low. Okay, so this is downtrend example, this is uptrend example. Let's go to page 2. Trend manipulation. If liquidity gets swept, this high cause the liquidity sweep, but first reaction of the spike that caused it doesn't indicate a down move to us, but rather an ongoing rally, but the rally doesn't end up taking the liquidity of the top before the top whose liquidity was taken, then this concept is valid. Alright, so I think we made quite a rocket science right here, but it actually makes sense. I don't know, I'll have to like backtest the shit and stuff. I'll ask some people for advice. You guys can actually like feel fucking free to like write in the comments what is your opinion and stuff. Like I don't mind. I actually love like seeing an actual interaction between us, and we can like actually test stuff together. And yeah, fuck. Wait, how long is this stream going? Or an hour and 15 minutes, not much. So in 1 hour and 15 minutes we were able to set up this whole concept. It is fucking crazy, man. So I might see like more different concepts in the Like fuck, now we have to like see, I don't know, fucking 10 examples of this shit. Who knows if this actually exists or this is actually like a rare like point. Fuck. Alright, let's switch to this view. Let's see if we can actually spot one. Okay, so I said we'll have to like do it for vice versa, but let's try to do it like this. Okay, so but what the fuck? So we're in downtrend and we are looking for a break of what the fuck? Oh, this is like a alright. Let's actually drop the lower time frame, but let's actually see if this works on lower time frames. That's, I don't know, 4 hour maybe. And we want to look for a trend. Trend is your friend. Let's see. So we are in uptrend. What do we look in uptrend? We look for break structure to the downside. Alright, so I don't know, I think this is one good example. Yeah, I think this is actually a pretty good one, but well, what? What the f... Wait, how do we turn this into like a uptrend if... How do we take liquidity? Okay, so look. In the previous example, we were looking at something like... Wait, what the fuck were there? Path. Alright. We were looking at something like this. Okay, top, bam, bam. Big valley. This liquidity gets taken. False reaction. This liquidity doesn't get taken. And what the fuck did we... Yeah, it creates fake break of structure. Fake reaction, reaction of overreaction, and went up to take this liquidity. And how do we like turn this into a downtrend situation? Man, I'm so fucking confused right now. Fuck. Okay, I'm better. It's done. Don't want to like end up like those fake, like those gurus that like make their own concepts, fucking silver butt plug or some shit, and it doesn't even end up working, or it's actually pretty much the same as any other concept, just like trying to make something on my own. My fucking mouse, man. I think we'll have to like what the fuck, reverse the picture. Okay, so I'll actually take a screenshot of this. Yes. Okay. Paste it in my presentation. Now rotate it. It can actually make much more sense, but just have to... How the fuck do I make mirrored image? I would need like... Okay, never mind. Let's assume that... Alright, so now I get it. What the fuck? Alright, so first low, I know, where is this? Where the fuck is this? We look for downtrend. Yeah. I can't remember where you were. What the fuck? I think this one, yeah. Alright, so this low has to take the liquidity. Alright. Okay, I found it. This is okay. So this liquidity gets taken barely from this low, and then we have another low. Okay. Oh, I don't think this actually works. Yeah, fuck no, it doesn't. I mean, if you even get me what we're searching for, we are searching for a downtrend, continuing downtrend, but this spike causes the break of structure, but it breaks like this and then continues down. Make a bit more sense. Okay. Oh, what would be a good example of this one? I mean, this could be it, but you don't have like a good reaction here. Actually, I don't know, because this can't see much going off this spike. And how far is this in the chart? Okay, no, we can actually like jump to the lower time frame. I just mark out our area. Okay, let's go to, I don't know, 30 minutes or something. Let's see. Alright, I don't think, because we have to like see the break of structure, but I don't think, or no, it's not this, it's not. I'm actually so confused. I'm actually very annoyed by this spike, because this is the news. I don't know, what is this, Friday 2nd February, yeah, this was the NFP probably. No. No, we can take this as an example. We hadn't have like enough conferences here, so I'll keep on looking. Again, what are we looking for? We're looking for a top which takes out the lower high. But those spikes are like too, how can I say this, too sharp to like read anything off of them. Like, we can't even see like a break of structure. It's just like a stick. But maybe this is not the one, because the lows actually go above the lows. This is not our case. It's really not. So it looks like this concept is actually very rare. I don't fucking know. Fucking. It's going to be like 1 a.m. I'm thinking because if I start this over tomorrow, I don't think I'll be able to reprocess, like recap everything we've covered here. I don't know, man. We have to do like stream tomorrow to make an analysis. I mean, analysis like not to take trade off of the NFP, but I just like want to see where the price will go. Just I don't know. But if you guys spotted like anything here, basically based off of this concept, comment me. I will take a good look. Let's just see. Lows are following the trend. Break of structure. Then this moves, it was supposed to be like a retest of this fair value gap, but what happened is a new like again we have to like pair this with the stuff that was happening in the previous like so. Okay, maybe actually wait, maybe I don't think we'll look at this one yet. Just look. Oh fuck. So basically this low swapped the liquidity off of here. Let's mark this out. And this low was also supposed to grab the liquidity, but I don't know, I wouldn't like consider. I mean, yeah, there are lows, but this one is like better low. We can consider this actually a good example, maybe. But okay, what do we see here? Downtrend. Let me mark up this downtrend. A break of structure. Break of structure. A retest with this fair value gap, of course. And again, we could like use any other confluences like Fibonacci or some shit. But then we get a retracement of a retracement, because it happened inside of this. This low didn't like sweep the liquidity of this low. And this is like, let's say, the reason why this is valid. I mean, we're still backtesting it. And okay, we can draw the Fibonacci, whatever. Fucking off of this top. Actually ends up touching the 50 retracement level. This, I don't think equilibrium would work here at this point. I don't think so. But yeah, it ends up somewhere around our retracement level, and then it ends up going back down with a trend. And that, ladies and gentlemen, is our fucking trend manipulation concept. Okay, so this is amazing right now. We have found one on the uptrend and downtrend. So we're actually getting some confirmations that this could potentially be like a solid concept. Actually. Again, I will... Fuck, should I mark up this right now? Yeah, I'll mark this up right now, why not? Okay, so... Let's see. Swap the liquidity. Okay. It is actually a pretty good liquidity point because look, if we, okay, yeah, we can't like see those ones, but we can see like this one, this lowest out of all of those three. It's actually a good area of liquidity. It's marked up with like what the fuck, a heavier green. How can I say this? It's like those are like more transparent than this one. And basically on this indicator, if something is less transparent and it's like has like more weight, it actually indicates to you that it is a stronger area. But yeah, you get the point. Let's swap the liquidity off of this one. What do we, then wait, let me just see how I marked here. False reaction. Okay, so got it. False reaction. This right here. This is a fair value gap. Okay, this is a fair value gap, and it failed to make a reaction and actually pierced through the fair value gap. So where the fuck is my arrow? Man, I fucking need you right now. What the fuck? Okay, I can mark this up. Failed reaction. Sorry. Failed reaction. And we can also look for the confuses on the failed reactions, actually, like a price piercing through the fair value gap or something like this. I don't know. We'll have to structure this up, but basically, failed reaction, fair value gap pierced through, making the lower low continue the trend. Okay, wait, so I'm fucking confused a little bit right now. Okay, what? Oh yeah, okay, got it, still on it. Causing continue the trend, okay. Yeah, something like this. And we actually put those ones onto the trend lines on top of the lower highs if it is a downtrend. So actually try and write this down. Okay. And this point below that followed the trend caused a break of structure. Okay. Lower low. Fuck. What is the lower low? It's actually you can consider this whole thing a lower low. Actually, you know, I don't give a fuck. But I'll just put the arrow. I don't know, something to do. Cause the break of structure. All right. And plus the low hasn't swept the liquidity. And actually let's see if this is actually a good liquidity point. Yeah, it's not like I mean, it's even better because the next liquidity area could be right here, which didn't got swept by this low. I mean, this one didn't got either, but this one is definitely not the good liquidity lobby, I would say. Liquidity yeah, like liquidity waiting to be taken, because I don't even know why would there be like stop losses and shit like this. I mean, yeah, it's a retracement, but it's like a minor one, and I wouldn't consider this taking trade off of it, but you get the point. So the lower low that followed the trend caused a break of structure, plus the low hasn't swept the liquidity. Okay, fine. Now what do we have? A break of structure. Okay. Now we have a break of structure, and now wait, what? Okay, this is fair. I got never mind. Failed reaction. Wait. So it made a retest, because whenever you see normally a break with structure like this, you would think it's a retest and it's about to shoot up. But in our case, this low didn't sweep the liquidity, and this is the valid concept right here. So this would be a retest on this fucking fair value gap. I don't know. Retest onto a fair value gap, which failed, of course, which is invalid due to our conditions. I'm taking out the take off a low that didn't sweep the liquidity. Okay, and I know, like I said, Fibonacci or whatever shit you're using for retracement. This is like another retracement right here. Sorry, retest. Yeah. Retest of a retest. According to Fib retracement level. Fuck. And I think this is it. It's actually it. Okay, I'll just switch over to the 4 hour will be good. Now where is it? Did I lost it? Okay, we can like make those align differently like this. I don't know if like this maybe. Yeah, it still isn't good. Fuck. This arrow. Alright, now I'll do it like this. Basically. What is the retest for that? This whole move, you know. Okay, we can just fib, doesn't really matter. And this one, okay. Lower low, I will actually mark this one because then we will get confused. This is it. Fuck. Where the fuck can I mark this? Okay, whatever. Okay, so let's make a recap. So this is a lower low that swept the liquidity. So liquidity got swept. Failed reaction. Fair value gap pierced through, making the lower low continue the trend. Lower low that followed the trend caused a break of structure. Okay, so break of structure. Plus the low hasn't swept the liquidity. Okay. I know we can actually mark this up a little bit. Because I just got confused by it. I can't even cause break of structure. Hasn't swept the liquidity. Alright, makes more sense. Hasn't swept the liquidity, okay. brick of structure right here, and this is a retest onto if this fair value gap right here, which is invalid due to, bro, where is this text? Oh, okay, I'll put it like this. It looks much better, I think, like this. So retest onto a fair value gap, which is invalid due to our conditions of a low that didn't sweep the liquidity. And therefore, we have another reaction that actually tests a retest according to the Fibonacci. So this is, I think, the whole concept covered for the downtrend and uptrend. So I'll just take a screenshot of this and let's see. I don't know if this is like a similar to the whack of, what the fuck is it, whack of accumulation or some shit, I don't fucking know. But basically, yeah, okay. This is like just another example. So we got this covered. I think I'll end the stream here because I'm really fucking tired right now. My brain is starting to rotten because of this shit. Yeah. So see you guys tomorrow. We will probably stream like NFP event. I mean, I'm not sure because like I have to go to some shopping center. I fucking know, but